Thank you, Ed. A pleasure as usual.
September 29th.
Yes, sir. It's going fast.
Yeah, Christmas very close. Or whatever.
Right. Well, then we got Thanksgiving between now and then, so.
Well, there's been some developments that I'd like to discuss. I've assembled a letter here because we attended several meetings at Del Mar College
Right.
related to the revenue and expense budget for next year.
Right.
And I've been looking over the financial statements. It's actually, they're not called the financial statements, they're called the award-winning,
Certified something.
well, award-winning comprehensive annual financial statements,
Okay.
or reports, I'm sorry.
Yeah.
Award-winning comprehensive annual financial reports. So I've been looking those over and extracting information from them. I've not gotten my own information because, as you and I have gathered in the past 2 years, when we try to get information on financials,
Oh, yeah.
on financial statements or support for financial statements, we first get an estimate.
Right.
And sometimes that estimate's like $26.7 million.
Yeah. Oh, wow.
And 105 years or 105 million documents.
Yeah. Well, I think you broke a record with that statewide.
Yeah, we have gotten calls from as far away as Fort Worth on that
That's
one.
right. Mm-hmm.
And I don't think that's over yet.
No.
So we've used their numbers to extract data because I've been concerned, and actually terribly concerned. I read the financial statements, and government financial statements are more difficult to read than regular corporate financial statements because they use different terms.
Mm-hmm.
And not everybody reads corporate financial statements.
Right.
So the people that read corporate financial statements have difficulty reading government financial statements. So I input familiar terms in here so that people that read this thing can say, oh, that's what that means.
Okay.
So we've taken their schedules and they have statistical supplement number 19 in their award-winning report.
Yes.
And it's very enlightening. And before we get into that, and we're going to get into detail here very quickly, I want to say that Dr. Sloan, the Chief Financial Officer,
Right.
he made a presentation at a meeting that I was not at after I'd given my 2-3 minute summaries of this debacle.
Mm-hmm.
And he said that there had been some misinformation
Right.
provided. And I think he was talking about me.
I'm sure it was. He wasn't talking about me.
I think he was talking about the figures that I was using.
Right.
And then Mr. McCampbell, who has an MBA in accounting, said that he checked Dr. Sloan's numbers and he agreed with him. Well, I've got a revelation, Doctor.
Mm-hmm.
I agree with Dr. Sloan's numbers as well, and here they are.
Here they are.
So, the presentation that he gave to the board was very similar to that presentation that he gave on the accounts receivable write-offs of $2.838 million
Mm-hmm.
when he was on Channel 6.
Right.
After he finished making that explanation on Channel 6, and I've got accounting degrees,
Right.
I said, what in the world did he just say? So after he finished with the presentation at the board, I said, well, he wasn't talking about the same numbers that I was presenting.
Right.
So why did he do that? So let's look at the real numbers,
Okay.
and the ones that he authored, by the way. So Del Mar College was broke in 2008 to the point that they couldn't give any raises to staff,
Right.
faculty and staff. Well, I looked at the income statement and they use strange terms. They say increase or decrease in net position. What that means is net income.
Okay.
Now, we understand net income. That's revenue minus expenses.
Right.
Okay, so they've got a little strange term there. But in 2008, they actually lost a little money.
Okay.
$1.2 million. They lost money.
Okay.
However, the prior year in 2007, they made $6.4 million. In 2006, they made $3.46 million. In 2005, they made $4.8 million. So they did have a little downturn in 2008. Now they weren't broke, and we'll go over the balance sheet here in a minute. They weren't broke, and I can't see any evidence of why they couldn't give raises that year.
Right.
But then in 2009, staff and professors got no raises as well. Am I correct?
That's right.
Okay, well, they had a pretty good year in 2009. Their revenue exceeded their expenses by $5.2 million.
Mm-hmm.
So we get into 2010. Now, we've got a cumulative effect here. They're making a lot of money.
Right.
Their revenue exceeds their expenses for several years now in a row with one minor downturn. So they're building up a lot of what we would call net profit.
Mm-hmm.
So in 2010, they made just over $6 million. In 2011, they made almost $7.6 million.
Mm-hmm.
Now in 2012, they had a banner year. They had a banner year. Now they did have to do a restatement, so it knocked it down a little bit. So they did still make $11.6 million.
Mm-hmm.
Do you remember getting raises in 2012?
Mm-hmm.
I
think there was a very minor one, wasn't
in 2015, the beginning of 15,
it? Okay.
2%.
Okay.
So in 2013, another banner year, a little over 11, almost 11.3 million.
Mm-hmm.
In 2014, not a bad year, to 10.4 million.
Mm-hmm.
And Mr. Johnson has said, or he's told the board, that they're going to have 7.2 million this year.
Right.
So these are huge numbers. In fact, I'd originally said it was 73 million, but we had a restatement and maybe some rounding errors. So it's at least $68 million that the college has made, which means their revenue has exceeded their operating expenses by approximately $68 million over that period.
Mm-hmm.
So if we go to statistical supplement number 1, the net position, and those words don't mean much to me. So net position is actually the net worth of the company, the assets minus liabilities. In a regular corporation, that's called net worth or equity.
Mm-hmm.
So I think people understand net worth a lot better than they understand net position by component. And that has no meaning to anybody. So if you look at
where did they get these terms?
well, they're government terms.
Oh, okay.
I'd like to give them credit for that, but they're government accounting. So if you look at, in 2005, their net worth at Del Mar was $56.8 million.
Wow.
Now, if you look at the net income for each year and add it to that net worth, it increases the net worth for next year. So you know the numbers are right.
Mm-hmm.
So we've got a difference from 2014, which we've already closed 15 and they're doing the audit now.
Right.
So we've got a difference of 117 million in net worth in 2014 compared to 2005 at 56.8 million.
Mm-hmm.
And if you add the 7 million for 2015, you get approximately $68 million of increase in net worth.
Mm-hmm.
In other words, what Dr. Sloan's schedules are telling us is that they've had revenue in excess of expenses from the period 2005 to 2015 of $68 million.
Okay.
Now, that's a lot of money.
That's an awful lot of money.
Yeah, that means the board has been approving budgets like I told them. 91% of the time,
Right.
the budgets were materially inaccurate.
Mm-hmm.
Now, do you remember the reception that got me when I told that to the
Oh,
board?
yeah. Mm-hmm. A lot of eye rolling going on.
I only thought we got the interest of one board member, And he stated it, he said he'd like to hear more. Well, apparently he was the only one that wanted to hear more.
Right.
So let's look at the balance sheet. And it's okay to make money and not have enough to pay raises, but there should be an explanation.
Sure.
And I'll tell you one example of how you can make money and not have anything to pay raises. If you make money and then buy assets like 95 acres of land, well, that takes your cash away. So maybe they purchased something and spent all that profit. But let's look and see. So in 2005, now this is going back a ways, they had cash of $33.8 million. But they had short-term investments of $19 million. Those are pretty substantial numbers. In 2005.
Okay.
So the college is not what I'd call broke.
No.
But let's go over to 2008 when the staff and the faculty didn't get raises because of some sort of budget crisis. Okay, in 2008, cash and equivalents, $48.8 million.
Okay.
$48.8 million. Short-term investments, $16 million. I'm not seeing broke here.
No.
I'm not seeing broke at all. And I know there were cutbacks. In fact, I talked to people that lost their jobs because of the budget crisis. Well, in 2009, Del Mar had cash of a little over $26 million, and their restricted cash, which is note 4, is almost $29 million. 26 million plus 29 million. Now there are some restrictions to that cash, but if we're running, let's say, $25 million a year in professor salaries,
Yep.
10% of that would be 2.5 million. I don't see where that would do much more than dent it. So in 2010, now I know there was still a budget crisis then. Cash of 27 million, restricted cash of 28 million. Have to add those two together.
Okay.
And those are big numbers. I don't see the crisis. And we already know they're making money. The revenue exceeds the expenses according to Dr. Sloan's schedules here, which I agree with. So we go to 2011, 35 million in cash. Restricted cash, 23 million. These are not small numbers. 2012, 22.5 million cash. Restricted, 19 million. These are huge numbers.
Yep.
No raises. Laying off people.
Well, and then they had those early incentives. I'd have to go, I think 2011 was one where they had they pay you a base salary for your 9-month contract if you just pack it up and retire.
And then come back as an adjunct.
Yeah, then they'll go out and hire an adjunct.
I guess it's one of those cost savings moves that I can't completely comprehend.
Right. Well, it's just like firing full-time people that, that had insurance and benefits and a retirement plan, and then hire a company that hires part-time minimum wage people.
And paying them $1 million to clean the toilets?
Yeah.
Yeah, that one I've requested some documents on that one because I can't fully understand those numbers at all.
Well,
And in the county you do a cost benefit analysis. So I asked for that as well. You always do a cost benefit analysis.
Right.
If it's going to cost me $1 million, I must have benefited more than $1 million to do it.
Yep.
So I'm looking for those numbers.
Yeah. I don't know. I went over there today and saw that $14,000 a year groundskeeping, and half the campus you got a lot of grass over a foot deep. So I don't know where code enforcement is.
they're non-existent unless you're on their radar because you're doing something else.
Yeah, I'm putting a note for Chris Adler Center in the front yard.
Now, in 2013, we're still under the budget crisis, I believe, because there aren't any raises.
No.
34 million in cash, 12 million in restricted cash.
Hmm.
These are huge numbers, Doctor. In 2014, yeah, you still didn't get the raise, but you had 44 million in cash, and your restricted cash is 10 million bucks,
Right.
and you still didn't get the raise.
Mhm.
That happened in 15, so at the end of 14, I guess, they approved it for the next year.
Well, do we know where the money is?
Oh, we can probably trace it, but let me tell you something about that. I just finished reading a book here, really a good book. It says Stolen Without a Gun.
Uh-huh.
And that's about, you remember WorldCom and MCI?
Yeah. Mhm.
They had a little problem. Actually, it was a pretty big problem. They went bankrupt.
Yeah.
They had some mid-level people in accounts receivable. And these were not officers, these were mid-level people. And they were doing what is called lapping. That's where you take one receivable and somebody pays it, then you post it against other receivables.
I see.
And then what they were doing was stealing the other receivables.
Oh, okay.
So that was accounts receivable lapping. It's very common. In fact, we've got the fraud examiner's manual here just arrived today. So very interesting little course there.
I bet.
It's going to consume a lot of time, but I think it'll render a lot of benefit as well.
Yeah.
So accounts receivable lapping sucks all your cash away because somebody's stealing it.
Mm-hmm.
So,
Okay.
and I don't know if it's correlated here at all, but do you remember those write-offs that we went through?
Oh, yes, I certainly do.
We used to see these third-party receivables,
Mm-hmm.
$185,000.
Mm-hmm. Yeah, that's the first one we uncovered.
That was, you sent in the PIA request, and we went in, and Dr. Sloan was very accommodating. We had that 5-foot stack of paper.
Oh, yeah.
Um,
We found the needle in the haystack.
the golden egg.
Yep.
And then when I requested a little bit more information on that, I got that $26.7 million quote,
Estimate, yeah.
which was apparently mathematical error unless you are talking the Fort Worth Star Telegram, and it was something else.
Yeah, right. Well, it depends on who asks you as to what the answer is going to be.
So we were looking at that, and eventually, and I mean eventually, we found a memo from the college controller to the executive something of human resources that said, because I was asking for the detail of the subledger transactions.
Right.
I wanted to see what was going on, which subledger transactions revealed the crime here.
Yes. Uh-huh.
So I asked for the detail of the subledger transactions, and the college controller wrote a memo to the executive human resource director, whatever she is, said, there are no subledgers.
Yeah.
Whoa.
Whoops.
You know, that's very similar to this.
Mm-hmm.
There are no
Sounds-
subledgers.
That's right.
And we went through an accounting conversion, and
Yeah, I was fixing to say,
it
that
just didn't work
Yeah,
out.
and that didn't work. Oh, yeah, we'll try it again.
So, yeah, it just has a lot of similarities to this.
Mm-hmm.
And then we went back and found some other write-offs, third-party write-offs. Remember, and I don't know the exact dollar amount, but they were somewhere between $90,000 and $110,000, where apparently the clerk pulled the file drawer open, there wasn't anything there,
Yeah.
and she recommended that we write it off because there wasn't anything there,
Yeah. No documents.
and it got approved and written off.
Mm-hmm. Yeah. That's right.
Did I explain accounts receivable lapping to you?
Yes, sir. I think I'm getting the idea. I think I'm getting the idea.
And then, have we discussed the lack of an internal auditor over there?
A couple times, but enlighten me.
Well, they haven't had one for years.
No?
Haven't had one for years. The CFO, who said that, I think he was referring to me, that I was putting out misinformation, when this is the information I was putting out, and it's the same way I analyzed it today. They're his numbers.
Yeah.
So he said I was distributing misinformation, but I was using his numbers.
Yeah.
He's the one that hasn't had the best of our knowledge in accounting course.
No.
And then I ran the names of all the people that I know in accounting over there
Yeah.
through the website, the Texas State Board of Public Accountancy,
Mm-hmm.
to see what their license number was or when they got their license.
Right.
There were none.
No.
No licenses.
Mm-hmm.
There's not a CPA over there.
No.
The CFO doesn't have, the best of our knowledge, we can't find it on his resume. He doesn't have an accounting course. And there is no internal auditor. And then, I'm not sure, I know how to read a financial statement.
Well, I hope so.
And the way I check myself, actually I use Dr. Sloan's schedules here to check.
Yeah.
I take the net income from one year, add it to the retained earnings or the equity from the prior year, and if it equals the current year equity, I know the numbers are right.
Right.
And they all work.
Yeah.
So I know these schedules work. Now, where the misinformation is, I don't know, because if these schedules have misinformation in them, the author of them would be Dr. Sloan and the controller.
Mm-hmm.
And Trey agreed with the numbers, and so do I.
Yep.
These are the numbers. Now, again, I have no idea what Dr. Sloan was presenting.
Right.
It was something other than what I was talking about.
Mm-hmm.
And why was he doing that? Well, most of that board, with the exception of a very few, most of that board probably doesn't understand these financial statements. We got one comment in there, and I'm not going to say who said it, but I'm glad she did. I said, you're generating all these excess funds. All the revenue exceeds expenses by tens of millions of dollars, which is a surplus, revenue over expenses. And they do budget for 1.5% surplus. So in a normal year, you'd expect $1.2 million in surplus. That would be a net income of $1.2 million.
Right.
So we're generating $10 million 3 years in a row. And she said, Dr. Sloan, it didn't surprise us that we had that, right?
Mm-hmm. I remember that. I was sitting there.
Even Dr. Sloan was a little bit speechless that way.
Mm-hmm.
Well, it should have surprised everybody. Actually, surprise is not the right word. It should have shocked people.
Right.
And it should have shocked the board members immediately when they saw that they approved a budget in 2007 that generated $6.4 million in revenue in excessive expenses.
Mm-hmm.
They should have said, hold it, we're getting the wrong numbers or we're doing something wrong.
Mm-hmm.
But that just continued from basically 2009 all the way up to the current year, actually. But it really took a good leap forward in 2010. And if you'll look back at the SACS document, that's about the time.
Yeah, that was there. I think it's on a 10-year cycle.
We had a change in CFOs about that time.
Right.
And SACS had some concerns, or expressed some concerns about the current CFO. And based on what I'm seeing, the budget that the board's getting is so materially incorrect, yet they're approving it.
Well, that's what's so discouraging to me, because I'm not an accountant, but the way you explained it to me and the numbers that I mean, these are Delmar's numbers. These aren't anything that you generated or pulled out of the hat somewhere. But it's just frightening to me that, if I had if I had an auto mechanic in there and I was getting ready to go with open heart surgery, I think I'd probably be a little bit concerned.
And if he pulled out the manual, said, just a second,
Yep. Mhm. Yep.
I think I've got the right craftsman wrench here.
Mhm.
Well, Doctor, I am deeply concerned, and it's not on a personal basis because now, if we're, let's say, 20% overtaxed for this stuff,
Mhm.
now, personally, I'm not taxed that much, a couple $100.
Yeah.
Just not much at all. But you know, there's some refineries in the tax industry.
Mhm.
And I'm thinking that if they're taxed, let's say, 800,000 a year,
Mhm.
and they look at these numbers and say, I'm 20% of my tax is going to profit here.
Right.
I'm being overtaxed.
That's right.
Now, 20% of 800,000 is a significant number.
Oh, yeah.
And then, so I'm sending this to, they list the largest taxpayers. So I'm sending a copy of this document to them with an explanation. And I'm going to include in that document some of the facts that we found about the collections of accounts receivable.
Okay.
Because that $2.838 million that was written off, that you draw that bell curve and you say, what's normal? And with so many of these numbers from Del Mar, all the numbers, not all of them, most of them are 2 standard deviations removed from the center.
Right.
So if you're out that far on so many numbers,
Mhm.
I think something's wrong. Now, I may be alone on that assumption because I don't know if you saw when the board came back from our last meeting after the closed session, Dr. Escamilla got a raise.
I heard about that.
Yeah,
And it was what, 4% or?
a little over 4. A little over
Okay,
4%.
well, last year, I believe it was, in the last 2 years, there was one year where he actually had a 10% raise and nobody else got one.
And we're saying nobody else got one.
Yeah.
And the
Okay.
The
Now,
drama professor.
I don't think that was the 2% that we had that one year.
Okay, the drama professor got up and said there hadn't been a raise since 2008, but actually there had been.
That's slight.
In 2015,
Mhm.
the beginning of the year, I believe you got a 2%. So during that period, when the college was generating all of this revenue in excess of expenses, which is normally referred to as net income,
Right.
and the equity of the college, it's got a different term, but the equity of the college was increasing by $68 million from
Right.
2005 to 2015, $68 million. And the bank accounts at 2014 had $44 million in them.
Right.
That was the unrestricted cash and cash equivalents, plus another 12 million restricted. And there's plenty of cash. They're
Yeah.
generating tremendous net income.
Right.
And the only person getting a raise is the college president?
Well, I think there were some raises for admin, but there were
Oh,
none for
my.
faculty.
Oh my.
Yeah, I guess I ought to file another Public Information Act request for that. But I do know the one year that the president got a 10% raise, which was about, I think, I figured out that was around $20,000. And then they gave him a $15,000 check as a performance bonus. So
Now,
in one year, he increased his income 35,000.
now, a performance bonus, based on their numbers, it appears the student count enrollment has declined between 2010 and 2015 by a little bit over 18%.
Right.
And I think it took a little bump this semester, but we want to look at the details because I'm afraid that bump is going to be high schoolers that aren't even going to the campus.
Yeah, dual credit.
So I see a direct correlation between not paying the employees
Mhm.
and the declining enrollment.
Right.
Over 18%. I mean,
Sure.
that's substantial, and if you look at all the other community colleges, there's 50 community college districts in Texas,
Mhm.
and with the exception of, I think, one, but I think it's it's Brownsville. I think they've been absorbed by somebody,
Mhm.
or effectively absorbed. With very few exceptions, everybody's had an increase in enrollment.
Mhm.
Del Mar's had a decrease.
Right.
I see a direct correlation between not paying the professors and losing the students.
Yeah. Well, students know, it's no secret in a environment, community like Del Mar College, that they're taking, we're taking hits on people saying, well, the quality's not there anymore, and you go over there and you get an adjunct. And, we've got some fabulous people that are teaching adjunct ed, don't get me wrong, but then on the other hand, you've got some that they don't have to do committee work, they don't have to have office hours, and et cetera, and they go in and teach their class and they're gone. And
A lot of those people work during the day and then they come out there at night. Now, it's also come to light that CCISD has a higher base salary than Del Mar College.
so does Portland, Gregory Portland.
Now, I can't imagine that.
No, because
Del Mar College requires basically a master's degree to even
in
teach.
most, yeah, there are some people that teach air conditioning classes and stuff out on the West Campus and so forth, the trade, so to speak, the vo-tech, they call that. And, then again, our CFO, who was a former dean out there, he didn't really go to bat for those people. I won't get into that on there, but, they found out. And from the first time I hit Del Mar College, I was on a committee for salaries. And I said, if you've got somebody out there with an associate's degree or a bachelor's degree teaching a welding class, that's just as demanding, as far as I'm concerned, as an English class. So why can't you pay them, for that instructor rate and don't worry about that degree? And, I was poo-pooed all the way down the line on that one.
And, Del Mar's average salary for a professor is about 33% below the Texas state average.
Yes, we looked at, you found that.
Isn't that amazing?
Yeah. I didn't know I was that underpaid compared to, other people.
And I can tell you, we just paid our windstorm insurance. Corpus isn't 33% cheaper to live in.
No, it's not. It is not.
That's just appalling.
Mm-hmm.
And so, who are you going to attract to Del Mar as a new professor, tenure-track professor,
Mm-hmm.
if you're paying 33% below the state average?
Sure.
And
Yeah.
if CCISD, which is in the bottom 25% academically of all the CISDs, all the ISDs in Texas, if they're paying more than Del Mar,
It's amazing, isn't it?
who are you going to attract?
Well,
It's not like in the 90s when good professors were trying to get in down here.
yeah, right.
Now, and I know a few good ones that have come from some fine colleges that are here,
Yeah.
but I don't think they're all that happy
No.
at their salaries right now.
No.
I mean,
Well,
how can you go from 2008, 2000 to the end of 14 and not get a raise and be happy?
mm-hmm.
And then realize that there was no budget crisis.
No, none at all. It's all smoke and mirrors.
It wasn't even, it was just, well,
Well,
I don't think it was smoke and mirrors. And that goes back to that integrity thing that they publish.
Mm-hmm. Right.
They say integrity is a core component of Del Mar College. Now, if Del Mar College is generating this kind of excess revenue over expenses for all these years and carrying these huge cash balances,
Mm-hmm.
how can that be reconciled back to the integrity thing when you're telling people, employees, that there's a budget crisis?
Yep.
I I can't reconcile that to
No,
that
no,
integrity.
that's, you know, if they just said, you know, we're not gonna spend the money, we're gonna go over here like Scrooge McDuck and keep it, then. But, you know, I don't know. And now, let me ask you a question. They spent just under $7 million for a 94-something acre plot out here at Yorktown and Rodfield. They wanna put the south campus in out here. And, you know, that's gonna be what, just to get it started, maybe not even finish, it's gonna be something like $200 million.
And just keep growing.
Yeah. Then, what are they gonna do with the west campus? What are they gonna do with the east campus?
If your student enrollment's declining
I know.
at 18% every 5 years,
Right. And you,
at some point, that trend's gonna hit zero.
right, and then you put that big campus out there, and then you won't hire people for what they're worth, and you're not gonna get, you know, you're not gonna get the good people in here for that. Then, I think that's totally, as far as I'm concerned, maybe I'm just plain flat dumb, but that just seems to be defeating on my
It
part.
doesn't make a lick of sense to me.
No.
Not a bit of sense. I don't see any demand for another campus with a decline, that substantial decline in enrollment.
But how many times over the past couple of years have you heard we're bursting at the seams?
I saw that on TV once.
Yeah.
I said,
What?
you're bursting at the seams with that huge decline in enrollment.
Right.
What kind of math is that?
Well, that's Delmar math. I was told one time that I'd already had a summer schedule made, and I do overloads to accommodate students, folks. It isn't for the money. I can guarantee you that. And I had a then vice president of instruction come up to me, Ed, and he said, "Well, we're not going to pay you that overload." And I said, "That's an adjunct pay." He said, "Well, there's some people over there in your department who are concerned that you're getting rich doing overload classes." And I looked at him, and I can't tell you exactly what I told him, but I said, "You've got to be kidding me, sir. I'm working for a third of my normal pay and I'm getting rich doing it?" I said, "Yeah, right. That's Delmar mathematics."
And it's very difficult to get rich at 33% below the average
That's
salary.
right.
That,
Well, you know, I mean, I moved to Corpus because it was a place I wanted to live. And, you know, I mean, families from up Bay City, and I always came back and went fishing and got salt water, and my bride and I used to fly from wherever we were. You know, I'd find out whose airplane needed to be limbered up. We'd fly into Rockport and come into Corpus, and, you know, she loved the place. But, you know, anymore, with what's going on not only at Delmar College, but these chug holes. And did you see now they're going to spend $380-some-odd thousand for a truck to drive around and photograph the chug holes?
but it's going to have to keep driving around because they grow.
Right, yeah. And they said it would only take them 3 months to drive the 1,200 miles it is of streets and roads in Corpus Christi, Texas. And then in the same story, they said that it takes 3 to 4 years to have the city staff drive that same. I mean, it was screwy. I'm going to have to go back and read it. Maybe I missed something there. But we're going to pay people to go out and run laser beam studies on chug holes and stuff to tell us where we are. Well, I can tell you, folks, and I'll do it for $300. I'll give you an 80
discount.
Yeah, discount, big discount. We're in deep trouble, folks. You got a bunch of holes that you won't go out and fill in because you're too greedy. You're spending all that money for something else.
Well, you know, there's a lot of corruption in South Texas, and I'm talking about the Valley, because I know a lot about the Valley, and it's really easy to pick a newspaper up and see that when the sheriff's in prison, the DA's in prison, and the judge's in prison, you know you got some corruption.
That's right.
But at least the federal government's in there addressing it.
Yeah.
Now, I drive out here, and Ocean Drive is probably our premier street
Oh,
here.
it is.
And I've got a four-door sedan. It's all-wheel drive, so it's a little bit stiffer. But if I drive down Ocean Drive, I'm beat up.
Yeah.
I am flat beat up.
Oh, yeah. I
That
drive it every day.
That is our premier street, and it is an absolute mess.
Right.
Now, I believe Mr. McCampbell was the force behind what was called Destination Bayfront.
Oh, yes.
Um,
I know that one well.
And I think that failed miserably, if I'm not mistaken.
Well, I'll admit on the air, I'm the one that designed that no destination bayfront signs with the big,
See,
and my name was on every one of them in town.
the Destination Bayfront was basically a big park with a dog park for $44 million.
That's right.
But that was the starting point, $44 million. So Mr. McCampbell was behind that. It did fail miserably. But if you look at that analysis, do an analysis of that 44 million, nobody
Right.
wanted it.
No, well, 65% voted it down.
And nobody shows up to vote.
Yeah, right.
So we had a turnout to vote it down. Now, he is the force, I believe,
Right.
behind South Campus as well.
Mm-hmm. Yep.
I can't find a need for South Campus.
No,
With an 18% decline in enrollment,
right.
I can't find a need for the South Campus. But Mr. McCampbell, again, is behind, he's the force behind this, I believe.
Yep.
And he said he agreed with Dr. Sloan's numbers, and he's the MBA in accounting.
Mm-hmm.
And I admit, I agree with Dr. Sloan's numbers as well.
Yep.
But I think we're talking about different numbers.
Well, it's very interesting. I'm glad you know how to get into these, all of the numbers, so to speak, as you put them, and they're all Del Mar's own numbers.
They are. They get an audit on these.
That doesn't make any sense.
Uh,
Oh, and then I wanted to bring this up. You mentioned CPA and internal auditors. I think that our bill for the auditing went from what, $13,000?
no, 43,000.
Okay.
43,000 to 310.
Okay, 43 to 310,000 in 1 year, because they're gonna hire a firm to do the internal audit.
And I've got a copy of that engagement letter. I think it's 254, 257,000 to perform the internal audit function. Now, let's talk about that, because an internal audit function, that's probably going to be part-time work.
Yeah.
And for $250,000. You could hire a pretty strong CPA that has also passed this exam here.
Yeah.
And this is a certified fraud examiner's exam. You can probably hire him for $200,000
Yeah.
full-time.
Mm-hmm.
So, and get him to move down from Houston, because that's probably where you're going to find him. Or Austin. So, the numbers don't make sense again to me.
Well, but the thing that bugs me, and I'll just tell you what was circulating. We were told several years ago, at least 5 to 7 years ago, that the reason that we didn't have an internal auditor and we didn't have a real good CFO slash, what would they call him? He was the vice president of business and finance, was that there was such a bad reputation at Del Mar College that the faculty in particular ran off anybody, that came in to do those functions in the administration. And that most people did not want to come to Del Mar College because of our reputation of running people off.
Running accounting people off.
Well, that and presidents.
See, I haven't heard anybody over there even addressing these numbers. And these numbers have been published every year. And what they do is contradict anything that's said about a budget crisis.
Yeah.
And I would think if anybody were looking at this at all, that they would have expressed their concern by now. So it appears to me that the CFO's position is pretty isolated from the faculty.
Well, and then, it used to be the vice president of business, finance, administration, underwater basket weaving, library purchases. I mean, it was a big, as long as your arm. And that's been, it used to be in charge of HR too. And now, all those have been split off. So our CFO is the chief financial officer, and what he has is the finance under him.
He has Mr. Johnson.
Administration's been stuck under HR. So I don't know where underwater basket weaving wound up, I don't know who. And we've got more deans now than we've got faculty members and students.
And that's when your enrollment's declined by
Mm-hmm.
over 18%. I don't know, doctor. I can't make sense of what they're doing. Now, I can make sense of their financial statements that they publish, and those don't correlate at all to the perceived budget crisis that I think has created the student enrollment crisis.
Right. And another problem we've got, Ed, is now that I'm on a roll, but 10, 15 years ago, I think we were at 58% of our budget went for instruction. That means the supplies, faculty, and so forth to teach students. And now we're down to, I think it's about 35%. So that extra money, as much as they hate to hear that, has gone into administrative costs. And the Wall Street Journal came up with this several years ago, the term administrative bloat. They see it. Everybody across the country sees it. But every time I turn around, there's another job ad for another dean or an assistant dean or an assistant to an assistant, and it's just gone crazy. And enrollments are down, and then we're overtaxed. I guess that's to pay for the administrative load. I don't know what.
Well, the overtax is just to increase the equity of the college.
Well, which benefits who?
Now they've got more money to buy assets with.
Right.
So when you generate all that extra revenue over expenses, you build your net worth, and you can buy 95 acres of land and pay cash for it.
Okay, well, what is it? What is a 9-month appointment for a master's degree incoming tenure-track instructor at Del Mar College? What were they paid?
I think they're under 50,000.
Well, it was 42, I think.
It's under 50 for a PhD.
Right.
That's right.
Okay. All right. So if you take a look at that, and then you've got a bachelor's degree in education for $3,000 or $4,000 or $5,000 more a year at CCISD, then what does that tell you? Okay. But if you look at the difference there, then a $35,000 a year raise for a president would almost pay for a full-time incoming master's degree instructor.
Let me make sure that I explain my feelings on that. The president's making about $250,000 a year.
That's right.
I'd be inclined to pay him another $100,000 if we were getting the results.
Well,
And I am inclined to pay all the professors more than the state average. And I know that it won't increase our taxes because we've already taxed for it.
That's right.
We're still going to generate more than $5 million a year excess revenue over expenses,
Right.
even after we pay the professors what they deserve to be paid.
Yeah. Yeah,
So-
make up that 33% shortfall.
Pay it to them. We've cheated them since 2008, and I mean we have cheated them. There is no excuse for what's happening. I'll pay them.
Yeah.
As a taxpayer,
Yeah.
I'm happy with that.
Yeah. If you get results.
We want the results. I've seen other community colleges that brought in presidents that got results.
Mm-hmm.
And I'm thinking, that person's worth $500,000.
Yeah.
And I think the taxpayers would be pleased to pay that.
Yeah. Well,
Now, I think they'd be displeased to pay $250,000 and get an 18% decline in enrollment.
right.
And professors that are erroneously told there's no money for raises available
Mhm.
for a period extending from 2008 through 2014.
Right.
I think that's a huge issue. And
Well, it's coming out.
it goes to integrity.
Mhm.
Integrity is the problem. When you tell people there's no money and your financial statements show what these financial statements show, there's a complete disconnect there.
Right. Well, and then to have the president maintain the a CFO with no accounting and then have all this hit the public, then, you know, it just doesn't make any sense to me. I'm sorry, it just.
And then we have to look at the internal control systems, and that's why you hire qualified people.
Right.
And that's why you have what are called internal controls, but they're checks and balances.
Right.
And one of the major components in a university for check and balance would be an internal auditor.
Right.
And we've gone for years without
Without
it.
it.
So, and you and I have seen the result of that.
Yep.
And it sure sounds a lot like this scenario here. So,
Well,
Doctor, I think we've probably run way over our time.
that's all right, it's a big second show.
But I think we've got some major, substantial concerns here.
Yes,
Um,
definitely.
the employees have been absolutely mistreated,
Mhm.
absolutely mistreated.
Sure.
And
And it's not only faculty, folks, because I'm faculty. I look at the custodians that were fired, I look at the groundskeepers that were fired, I look at secretaries that have been shuffled around with no raises and so forth and so on. You know, I learned real quick, just out of graduate school, Ed, a very valuable lesson. I went into a research unit in Illinois. It was government, what's called a postdoctoral position. And I ran into one of your fellow Iowans up there. He was Danish, Dr. Ivan Lillehoy. He's gone now. But he told me, he said, I was having a little problem with things. And he said, let me tell you what, in any organization, he said, you can make anybody that's above you in the chain of command mad, but he said, never, ever, ever perturb anybody that you have to depend on all the way down to the custodian.
they're gonna get you.
They're going to get you, and I mean, that runs rampant at Del Mar College. I hate to say it, because those people are worked to death, folks, and with no, you know, with absolutely no thank you, no raises, nothing.
What they did, or what they have done since 2008, is so much worse than not thanking them.
Yeah.
These are people that's their only job. They're going to stay there until they retire.
Right.
And so they get mistreated like that on a salary basis.
Yeah.
Right? The paper boy gets a raise.
Mm-hmm.
These folks didn't get any for an extended period of time.
Well, plus we had all that surplus money. I think that's what's the term, frost me?
That's a term.
Yeah. I think perturbed is the proper way to say it to you out there, ladies and gentlemen. So, as the president of the Taxpayers Association, that even pains me even more. And then, if you would you get up off that chair next time we have a vote around here and go vote your conscience and update your knowledge of what's going on, and let's see if we can get a little bit of change in this system.
And we can blame whomever we would like for this integrity issue, telling the employees there was no money available. We can blame whomever we like, but we have elected an oversight board that has approved every one of these.
Yep.
They've approved it.
Remember that, folks, when it's coming up.
So let's not vote the names that we recognize. Let's vote the people that
There you go.
will get the job done, which the job has not been done.
No, this is totally out of line. I'm trying to be kind.
Doctor, I appreciate everything. I guess we probably better wind it down.
Okay, all right, appreciate it, Ed.
Thank you, sir.